Yo, what's up traders? Welcome back to another video. Today, we are talking about grading your trade setups. This is what I mean. Having a grade 1, grade 2, grade 3. That way you know how to minimize your risk and maximize on your profit. So we're going to look at two trades that formed yesterday on Nasdaq and gold. And I want to show you why one setup is more valuable than the next. The probability of it actually making you money is far much greater than, the other setups. So we have our Monday. This is Monday, yesterday. And yeah, the steps are the same. The previous day's high, previous day's low. Step number 1. And there was no news yesterday that could have affected the trade during the New York session. So, as you see, the market breaks above the previous day's high and consolidates there. They try to move higher, but there seems to be a very strong, resistance. Yeah, resistance. Let me call it resistance. But there are a lot of sellers up here. So when you look at Asia, they set the high of the day in Asia. In London, they come and try to break above it, but they get pushed below very quickly. In the New York session, they come back again to the high. So my bias is that Nasdaq is falling. The general bias of the day is that we are bearish. So having our bias already set in place, the first hour is where everything in the New York session happens. So the first hour sets the high and the low of the session, as you can see. The first hour sets the high and the low. So, with my bias in mind that, we are going short. So, all I'm waiting for is in the second or the third hour for the market to give me a pump and dump setup to the high for me to ride that short. So at 9:30 the market breaks below the low and then gives a very nice pump and dump setup to the high. But this is not the high of the day. This is the high of Asia. So our high of the day is here. That was during the London session. Now, the market gives me a pump and dump setup to the high, but does not reach the high of the day. Alright. Then it gives me an M pattern, as you can see. For those who don't know the M pattern. So this is our M pattern, the market, and then breaks structure. So let me show you that in the line graph. So yeah, so our M pattern is here. This is the M pattern. They break structure, they retest and continue. Now, during the retesting, we are waiting for an engulfment. So, this was the break of structure, retested, gave us this engulfment at 9:56. So, this was the entry. Now, this is where now you are able to separate high quality setups from low quality setups. It is where they form in reference to the high. We are buying high selling, we are buying low selling high. Now, you see this box. We want the setup to be, in this box. So, say for example, this was our high. Then this setup would have been perfect because it formed above the high of the day. But that is not the case. We are still inside the high of the day. So, that is clue number one. Clue number two, the distance. Look at this distance here. There is a possible stop hand area here. So, if the possible stop hand area is very small, then you know that your risk is small. But when you enter here, you see, you now have to increase your stop loss size. So that is just basically the way grading the setups works. If you have a smaller risk, then that is a high quality setup. And if it's above the high, if it's, we are selling high, so that would be your cheapest price. That would be your highest probability setup. Now, does that mean that this setup is bad? It's a low probability setup, but now you have to reduce your risk by, increasing your stop loss size, but also reducing your lot size. So, we have our stop loss and our take profit. And as you can see, the market did fall. Market did fall. But yeah, and this was the entry for your 50 pips. Let me call it 50 pips because, well, with Nasdaq, this is around 500 pips. So that was the trade in Nasdaq. Now let's look at gold. So yesterday, when you look at the setup, this was the previous day's low and high. The market kept falling the whole day. So this was a broken down market. Now, my thesis was, and as you can see, my thesis was that we would continue falling, but we would have to stop hunt the high of the session. And the first hour sets the high and the low of the session as usual. And then all we have to do is wait. So we wait, and the market comes and triggers the low of the day, which is also the low of the session. Now, we have our boundary line where we are expecting the market to break structure. And the market does break structure. But also, as you can see, this is a classic, what's that word? Is it a symmetrical triangle or a wedge? Well, do your research. But this is something that when you look at the markets for a long time, you start observing patterns. And when you know that this pattern works, this pattern does not, then you are on the right track Now, so the market breaks structure. So whatever I'm waiting for is an engulfment. Now, the market never gave me an engulfment. Now, I want to show you something that I've observed, the last couple of months. This setup here. When you see a candle that has no wick, say for example it's a bullish candle above at the high, looks like this. This is a hanging man or a hammer. Do your research. And then the next candle, this is a bullish candle in an uptrend. The next candle is actually a bearish candle, but it has triggered that. There is a pin above it. Then that is a clear indicator. And if you do your research, you'll see when you are at the low or at the high, when this setup forms, or this setup forms a candle with no wick, and then the next candle is the opposite candle, but it has wicked down, or it has triggered the low of the previous candle. Then we are changing direction, and this is what happened. And go do your research and look at when you are at the high and you get these setups, what happens. But that is not the point. This is something that I've just noticed, and it's something that when I see, I am like, it is something that I might incorporate in my trading strategy. But we are looking for an engulfment because the market broke structure, retested, so we want an engulfment. And this is where the engulfment at 10.18, this is when the engulfment formed, and that was the entry for our 50 pip move. Now, this was, to me, this was also a low probability setup because of the amount of area that could have been stop hunted, all this area up to here. So if this setup forms below here and it is compressed, there is no very big distance to stop hunt and play tricks on you. This is a very, very high quality setup. But it's all about understanding what you are risking and your discipline. So guys, that is how I usually grade setups. And yeah, it's all about understanding what you want from the market, staying resilient and disciplined, and learning from every single trade, whether it's a winner or a loser. So hopefully you got value from today's video. Make sure you like, make sure you subscribe. Yeah, see you in the next video.